overnight, Washington pledged to work closely with a new Japanese government after the Democratic Party of Japan, the DPJ's landslide election victory over the weekend. But what about closer to home? What does a DPJ win mean for North Asian economies? Daniel So is regional economist, also FX strategist at Forecast, live here at our Asia headquarters. And with him is our guest host still, Dr. Andrew Freres from BNP Paribas Wealth Management. Gentlemen, both of you, good morning, and great to have you with us. Daniel, let me start with you. The short answer to that question is what a DPJ government in Japan means for North Asian economies?
Actually, I do not really follow that closely. I mean, for the Japan side, but,
all right.
Yeah. But I know that so far the impact on the North Asian currency is actually not that big yet.
Okay. All right. What could be the impact, though? What are you watching?
There had talk about whether the yen, the yen will actually. They are looking at because yen has been the most expensive currency, 7 currencies so far. Yeah. So there has been concern about whether could be a sharp collapse in the yen, especially if risk sentiment improve and if things go on well in Japan. And if you look at the huge correction in the trade surplus, the yen is not supported by fundamentals. And according to some of my conversation with Korean policymakers, they are particularly worried about a sharp collapse in the yen that will lead to eroding competitiveness of the won. And because they've been monitoring this pairing very closely, and
sure, the yen-won cross.
Yeah, yen-won crosses, and yes, this is what has been giving them the advantage over this global financial crisis, that the export have been fairly resilient so far.
All right, interesting. So, I mean, your specialty is you're sort of a bit ex-Japan. You're for Taiwan, Korea. From your chat with policymakers in Korea, what kind of sense do you get? KRW at these levels, are they fairly happy with it or not?
There has been market rumors that Korean authority want to support the dollar won at 1,240, and the rumors have been pretty widespread. So you can see there's a lot of stock coverage and importer buying in 1,240 to 1,250.
Yeah, we're at about 1247 3/4 right now in dollar yen.
Yes.
Okay, dollar won, excuse me. Karen?
I'm just looking at some of the South Korea data that came out not so long ago, Daniel. What did you make of South Korea imports, exports? What's it saying about the pace of recovery in that market?
This coming August trade data will be widely watched by market player, and it could be used as an excuse to push up the dollar won to 125 to even above 1,258, because they are actually expecting a fall in this trade surplus. And so far, Korean export has remained resilient, but has not picked up as fast as market has expected. And they're trying to see what if the import piece is going up, and whether we will see a fundamental weakness in the trade surplus.
Daniel, the idea is that the new administration may very well, in Japan, may very well focus a lot more on the domestic economy, and particularly consumer spending. And they might say, you know, it really doesn't matter what the yen is, because export is not what is going to drive the economy. And that has been argued, again, can be potentially argued, that they will not mind seeing the yen strengthen rather than weaken. I mean, presumably they want the yen to weaken if they're going to be export dependent. Since in fact it's going to be domestically dependent, okay, then it really doesn't matter what the yen is going. Do you think there is validity on this idea?
Suppose if you look at China, the transition between export-oriented focused growth back to domestic, it actually takes time. You know, you can't just we just can't. It actually cannot just happen in a short term. Despite fiscal measure, I mean, there's a lot of cultural factor, structural factor involved. So I was looking at it from a Korean point of view. In other words, I'm looking from Korean point of view, because they know that the actual advantage of their competitive exchange rate is actually due to the sharp rise in the yen. So
okay, well, I must jump in here, Daniel. Sorry to cut you off, but we are heading to a break that's coming right up. Thank you for joining us today, Daniel. So is regional economist, FX strategist, Forecast.